Welcome to Rich Tribe. You know that feeling? You're working harder than ever. You're doing everything you're supposed to do, but you feel like you're just stuck. You get paid, you cover the rent, the car, that one bill you almost forgot about, and poof, any financial breathing room you thought you had is just gone.
It's this, right here, this feeling. The real frustration isn't about not being able to afford luxuries. It's about your hard work not adding up to a sense of safety. It's about knowing you're just one unexpected expense away from real trouble. If that hits home for you, then stick around because today we're pulling back the curtain on the invisible force that's keeping you there.
Exactly. I mean, we were all told the same story, right? Work hard, be responsible, save your money, and you'll get ahead. But when that doesn't happen, you can't help but wonder, is it me? Am I just bad with money? Why does it feel like I'm on a treadmill that's just getting faster?
That is the central question we're diving into today, because often the problem isn't your effort, it's the game you're forced to play. We're going to break this down into 5 parts. First, we'll expose the hard work trap. Then, we'll name the real villain, inflation, the silent thief. We'll show you why saving isn't enough, then hand you the anti-inflation playbook, and finally, help you start building your financial shield.
So let's start with that first piece, the hard work trap. We call this the survival math trap. It's that frustrating zone where your income is just high enough to cover your bills and keep things running, but never high enough to actually build a real financial cushion. You're not getting further away from financial stress, you're just maintaining motion. You're essentially living the same financial month over and over again.
But there's something else working against you, a bigger force that operates in the background. This brings us to part 2, and it's time to meet the real enemy of your money, inflation. Think of it as a silent thief. It's a wealth killer that works so quietly you don't even notice it until you realize your money just doesn't go as far as it used to.
So what even is it? Well, in the simplest terms, inflation just means your money loses its buying power over time. Think about it like this. Last year, maybe $10 got you a really good pizza. This year, that same pizza is $11. Your $10 bill is still a $10 bill, but its power, what it can actually buy, has shrunk. That's inflation.
Now, check this out because this is so important. Inflation doesn't hit everyone the same way. It's like a tax that disproportionately punishes middle-class families and anyone earning a wage. This table shows you exactly why. The middle-class family spends about 75% of their income on just the essentials. For the wealthy family, it's closer to 36%. So when an 8% inflation rate hits, it absolutely demolishes the small amount of money the middle-class family has left over. The wealthy family, they barely even notice.
Okay, so if everything is getting more expensive, that just means I have to be more disciplined and save more cash, right? Just put more money in the bank?
You know, that's what we've all been taught, but it's actually a dangerous myth. Here's the hard truth. For most people, letting your money sit in a savings account is one of the surest ways to lose wealth over time. Just look at this chart. Your savings account might pay you, say, 3% interest. But if the real inflation rate is running at 6%, your money isn't growing at all. It's actually shrinking.
Wait, hold on. Let me see if I've got this. You're telling me that if my bank is paying me 3%, but prices are going up by 5%, I'm actually losing 2% of my buying power every single year just by keeping my money in the bank? That is it. Exactly. It's what's called a negative real return. And it shows why just saving your money isn't the same as protecting it. You are, quite literally, going backwards.
So, if you can't save your way to financial safety, what do? You have to invest. And this brings us to the most critical part of our conversation today, the anti-inflation playbook. This is how you flip the script and make your money start outrunning inflation instead of being eaten alive by it.
It really all boils down to one single, non-negotiable rule. To build any kind of real, lasting wealth, the growth of your investments, after you pay taxes, has to be higher than the rate of inflation, period. That is the only way to actually get ahead.
All right, so how do we do it? Tool number 1 in your playbook is stocks, also known as equities. Over the long haul, the stock market has been one of the best inflation fighters out there. And why is that? Well, when you own a stock, you own a tiny piece of a real business. And when that business's costs go up, what does it do? It raises its prices. That pricing power lets the company's value grow right alongside inflation, protecting the value of your piece of it.
That makes sense. But honestly, it sounds terrifyingly risky. The market goes up and down like crazy. The last thing I want is to lose the little bit of money I have because I picked the wrong company or got in at the wrong time.
That is a completely fair and very common concern. And for most of us, the answer is not to try and be a stock-picking genius. It's to invest in low-cost, diversified funds, like mutual funds or ETFs. It's the old don't put all your eggs in one basket idea. These funds spread your money across hundreds of different companies, so if one has a bad year, it doesn't sink your entire portfolio. The key is to think in terms of years, not days.
Okay, let's look at tool number 2, real estate. This is a classic way to hedge against inflation. As the costs of building materials and labor go up, what do you think happens to the value of existing houses? They tend to go up too. Plus, if you own a rental property, you can adjust the rent over time to keep up with the cost of living. It's a real, tangible thing that protects you on both its value and the income it can generate.
Now, if stocks still feel a bit too risky for you, there's another tool that was literally designed for this exact problem. They're called TIPS, which stands for Treasury Inflation-Protected Securities. These are basically government bonds, but their principal value, the money you put in, automatically goes up with inflation. So if you invest $1,000 and inflation is 3%, your principal actually becomes $1,030, plus you get interest. It's a direct way to make sure your capital keeps its value.
And finally, our fourth tool, gold and other commodities. For centuries, these have been seen as a store of value. When people start to get nervous about the buying power of their regular currency, they often flock to tangible assets like gold. It won't pay you an income, but it can be a really solid piece of a diversified strategy to protect your wealth, especially when inflation is running hot. So those are 4 powerful tools to put in your playbook. Hey, if you're getting value out of this, do us a favor and subscribe to the Rich Tribe channel, hit that like button, and share this with somebody you think needs to hear it. Okay, now let's get into how to actually put this into practice.
All right, we've laid out the problem, and we've covered the tools you can use to fight back. But knowledge without action is useless. So, this last section is all about turning these ideas into a real plan. It's about building your financial shield.
First things first, let's talk about what not to do. People make these common mistakes all the time, and they totally sabotage their own efforts. The biggest one, as we've seen, is relying way too much on cash and fixed deposits. That's a guaranteed way to lose. Another is panic selling the moment the market gets a little shaky, or chasing after the latest hot trend without any real strategy. And please, always remember to think about your real return. That's what's left after both taxes and inflation have taken their cut. So what should you do? Here it is, your 4-step escape protocol. It's simple, it's not glamorous, but it works. 1. Stop the bleeding. Hunt down and cut those silent financial leaks. High-interest debt, subscriptions you don't use, bank fees. 2. Build a buffer. Before you go big on investing, create a small emergency fund. This is what lets you handle a surprise expense without derailing everything. 3. Raise your earning lever. Don't just work more hours. Focus on increasing the value of each hour of your time. Learn a new skill, get a certification. And finally, step 4, automate protection. Set up automatic transfers from your checking account to your investment accounts every single payday. Make building wealth the default option.
Let's wrap this up with a really powerful thought. Inflation is gonna happen. It's a fundamental part of our economic system. That's inevitable. But watching your wealth and your hard work get eaten away year after year, that is optional. You can choose to step out of that cycle by understanding the rules of the game and taking these deliberate steps to protect yourself. So in the end, it all comes down to asking yourself one simple but profound question. You go to work every day, you put in the hours, you work hard. But is your money working harder than you are? Or is it just sitting there, silently losing value, while you're busy just trying to keep your head above water? Something to think about.